Mainstream media have officially just confirmed that short selling is something which is happening in the markets. We've seen it with the likes of GameStop being shorted over 100%, having over 100% short interest. We've speculated it with AMC, and this is something that's officially just been confirmed. I'm going to show you guys the clip now.
A lot of people, there are a lot of short sellers out there that have been borrowing stock they didn't have. In other words, yes, I think there are dynamics where retail investors can get caught, but it's really a dynamic where I think this is going after bad companies.
Yeah, but here's what's interesting.
So I'm first going to take this back a little bit. Short selling in a nutshell is when you bet for a company to decrease in terms of share price or market cap over whatever period of time. And so the process in which this would happen was you would borrow shares from a broker, and then you would resell those shares back to the broker at a lower valuation in the future. And naked shorting is actually a process whereby you're shorting shares, you're borrowing shares that don't actually exist. And the reason why this has actually been allowed to happen and being able to slip through the cracks is essentially because even though the institutions such as Goldman Sachs, etc., may not actually have the shares readily available, what they would essentially do is they would know that they would be able to get the shares from somewhere. They just don't know exactly where. And so they would allow short positions to open on certain companies, even without having the shares readily available. And I guess this actually matches for me the idea whereby it's sort of like if everybody was to pay back all of their debts, all of their loans, all of their credit card debts, what would happen is that the financial system would essentially bleed with money, because when you're borrowing these shares, when you're naked shorting, you're actually paying interest on the shares. And so borrowing and interest just in general is a very, very profitable business for banks and institutions. And this matches the idea that I've always heard that if everybody was to repay back their debts, mortgages, car debts, credit cards, the financial system just wouldn't work. The banks wouldn't have enough money to pay everyone back. There just isn't enough money to pay everybody back for all of the debts that they have, all of the mortgages outstanding, all of the countries in debts to other countries. And so it's kind of like the person at the bottom, us retail investors, are always going to lose to the institutions. And again, this isn't really a bad thing. This is just how the markets work. And in fact, it is a bad thing. It's a bad thing for us. But for the institutions, they know that they can always make money from this actually happening. They know that there's always going to be someone in debt. They know that there's always going to be somebody needing a mortgage. And it's actually been confirmed that all of the speculation that we've had of seeing over 100% short interest in certain stocks is actually a real thing. I've been a holder of AMC since early January, and I've been picking up shares, couple hundred shares in every purchase. And the reason as to why is because of this idea that I just mentioned previously. And for me, it's more not even purchasing for belief in the company, but in all honesty, I'm purchasing for this exact concept that I've mentioned. The concept that these institutions are trying to take advantage of the retail investor by shorting a company, over shorting a company that is already really low in terms of share value, and over shorting more shares than what's actually readily available in the market is something that us retail investors will never have access to. We may never be able to overshort a company or overborrow more shares than what's actually available on the market. And so with this, I have bought AMC, and I believe that long term, this may just be something that may be picked up by us, because our financial system is regulated heavily. And for something like this to be able to slip through the cracks, for us to be able to speculate that this is happening, and then for the mainstream media to pick up that this is happening, I don't know if the financial system would actually be able to sort of tackle this. I don't know how it would be done. Obviously, I'm not, I do work in finance, but I'm not too heavily involved in sort of regulations, etc., and how it would all actually work and how they would regulate it even more than how it's actually being regulated now. But for us retail investors, I mean, a lot of us have been looked down upon as though we're, I guess, not as intelligent as some of the people in these institutions. And I agree, we're most definitely not. But then it shows that even with, I guess, our insignificant level of intelligence in comparison to certain institutions, we're still able to spot where the cracks are in the financial system. And this may just be only one of many, or it could even just be, I guess, one that's happening now. It could genuinely just be a mistake. But for something like this to happen, and for us, I guess, for this to be happening for years, and for us to only really spot it and take action upon it now, I think that there could be a change. I mean, the change is already happening. We've had GameStop, AMC, BlackBerry, Nokia, loads of different companies trying to be pushed and trying to be, I guess, short squeezed, not even just for our financial gain, but more just for trying to disprove, or I guess just show that we do see these gaps in the market, and that we do want to take action on where we see faults in our financial system. And so I think this is only really just the start of what could be like a really big revolution, and we've seen it with GameStop. And with this revolution, again, we could aim to, I guess, tackle a whole bunch of other companies whereby naked shorts may be being given privately to other investors, to other institutions, to hedge funds, which does put us at a massive disadvantage. We could be purchasing a stock, and when we purchase a stock, we purchase it in the sense that we believe the company to grow long term. We're trying to give this company access to capital immediately. That is the aim of the stock market. And with these institutions overly shorting companies, it kind of weakens sort of the sense of, okay, cool, this company is going to grow on a fundamental analysis. They're going to grow because of their revenues, because they've changed a certain company. But for my recommendation to everyone watching, again, I don't think this is going to end anytime soon. I'm still going to be holding my AMC shares, that I've been holding since January of this year. I think I said 2020. It's actually 2021 since I've purchased these shares. I'm going to continue to hold. I have no intentions of selling, even in the short term, long term. If the share price dips 50, 100%, even if that, I'm still going to hold the shares. The share price increases another 200-300%, I'm still going to hold the shares. Essentially, for me, it's more for the concept rather than the actual financial gain. I mean, have I sold some of my shares? Yes. Sold them when I was up 200%, 300%. Am I selling now? No. Do I have any intentions to? Again, no. With it being the concept, I don't know if I ever will sell them at this point. But what I will do is just let you guys know that being in it just for the financial gain, being in AMC just for the financial gain, is a risky play, as the share price could swing high or swing low 50 to 100% in a day. We've seen moves 100%, 200% in a day to the upside, and this could easily come back to the downside. Again, I feel like people are just purchasing more for the concept. Certain people now getting in for the financial gain. And what you need to remember is that the reason why the share price can climb so high is because there's somebody that's willing to buy shares at that price. And looking at valuations, certain people will be like, okay, cool, shares aren't worth that price. And then it may only be a matter of time before things just come crashing down again. Again, I'm excited. This has all hit the mainstream media now accidentally. I know we all know that CNBC didn't mean for them to actually leak information as to, okay, cool, this is officially naked shorting, but they have done. It's out there. There's nothing really they can do at this day and age. I mean, if something hits the internet, it's never really going to go away. But I think we all just need to stay skeptical and be careful with what we're doing. Be careful with what we're investing in and why we're actually investing. I have put a fair amount of money into these AMC shares, but again, I would openly tell any one of you, it's not for the financial gain, and it is for the proof of concept. Even though I'm up by quite a bit, I have locked in some of my money. I have cashed in some of my capital, and I think I've actually cashed in the actual amount that I've invested. So I'm playing with profits here, essentially. Whether the share price triples in value or goes down to zero, I don't really care, in all honesty. But I do feel like a lot of people watching this should be careful with how much they invest and what they're investing in. And just remember that you're never really going to get a better entry than the person investing in at $2. We could be buying it at $50, $30. There's going to be someone that's bought it at $2, and they would have had it much better than us. I mean, I was buying in as early as $4. Will I be able to buy it at that price ever again? Probably not, in all honesty. But again, stay safe, take care.